the people want your insights. Where do you want to begin? I imagine with yesterday's CPI inflation numbers kind of the talk of the town right now.
Yeah, CPI and PPI a day earlier. So on Wednesday, we got the producers price index, and yesterday we got consumer price index. They didn't actually raise any alarm bells with inflation. Everything came in as expected. Here's the producers price index that I'm looking at on my screen right now. I mean, a lot of people are saying, is the Fed's new target 3% instead of 2%? Because it's like we got down, if you remember, after the pandemic, it was up at like 7%. We got down pretty quickly, but this last percent is just hanging on. And then if you take a look at, of course, the consumer price index, I mean, that came in as expected as well. Nothing surprising. But what surprised people yesterday, not surprised people, but we've been getting a lot of employment news, Sip. Have you heard about this? There was a readjustment of the first 3 months of this year, and it was like significantly down from what was initially calculated.
I mean, I'm hearing this, and my question to you is, throughout your history of looking at these numbers, have we ever been this far off this often than we have now? Because I'm seeing really huge swings.
Yeah, that's a whole different discussion. So that discussion and the scoop is how well are we getting this data, right? The traditional way that we got this data was sending surveys out to individual households. That's for the unemployment information, like the unemployment rate, and sending information out to employers. But the startups and the businesses that are coming on board, they're coming on so strong, so fast, and they have kind of this mentality of like, let's go do business. The last thing they want to be doing is answering a survey. So when you delve into the Bureau of Labor Statistics, like data gathering methods, you find out that, hey, they're not getting the surveys back on time. The surveys are coming back half filled out. And how do you extrapolate like accurate data from that? And, there was actually a commission that was established to kind of revisit this, and they kind of ramped up employment to work on that statistic mechanism. But with all the Doge cuts and things like that, that group was disbanded. That was supposed to address that. And actually, you've heard, there's been a shakeup at the Bureau of Labor Statistics. Their budget has been cut. So as far as the accuracy of the data and the swings of the data, whether the tolerances, I think we're going to, until we address that, it's going to be all over the place, Sip. But I think everybody actually feels it intuitively that the job market is, getting tighter and tighter. And one place that's actually quite easy to get statistics is that weekly unemployment report, right? Because when people come to claim a check from the government, their name is taken, data is logged in the system. The government doesn't just hand out checks. So that unemployment report seems to be, where investors are looking for some of that, tried and true data. And the unemployment report says unemployments are going up. That's what another key piece that caused the market to jump yesterday was that unemployment report. All this news about employment and the labor market not being very, strong right now, that leads the Fed to have to drop interest rates, which is what investors have been wanting. So any bad news when it comes to the employment numbers, investors right now are taking as good news.